Good day to everyone. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Let me display the PowerPoint presentation. It is Asian session live market analysis on a fresh week starting from Jan 25th, 2010. Between 5 and 5:30, we are going to make an analysis and see how exactly the market is going to behave in this particular week and also for the day. Let me give the link for the live market quote page. You can open it in a browser, and I'll fix the camera over the live market quote page for you to see the quotes here. So currently, euro is trading around 1.416668. The low is 1.4112. The high is 1.4173. The net change is 28 pips positive. So after the year session close on Friday, euro has gained about 28 pips currently. And in the case of GBP, 1.461106114 or the bid and the ask, 1.6093 is the low, 1.6135 is the high. Market is currently near that of the low. The net change is 1 pip negative. So you can understand that they are making subdued moves in the case of euro and GBP. The euro is making 27 pips positive and GBP is currently just trading with no gain or the no loss, almost 0.0000, and USD yen is making about 26 pips positive. So little bit of contrarian moves are seen, euro gaining, USD yen gaining, and USD GBP USD is losing when compared to that of euro USD rising. So they are all contrarian moves and not much of an activity is seen. Subdued contrarian moves are seen in order to handle the crosses to start with. Then low volume condition could be the attribute for that. Then in the case of USD CHF 1.0384 and 87 or the call 1.0386 is the low. So currently CHF is trading near that of the low. The net change is 30 pips negative. When euro is showing 29 pips positive currently and CHF is also showing around 29 pips negative. So you find a tandem opposite move is seen in them. And normally when euro rises about 29 pips, CHF is expected to drop only 18 to 22 pips, and that will be the ratio. But now they have made a little more downward move in order to make a brief downward stop and before making further rise and making a rise above that of the high. In the case of USD CAD, you find a phenomenal rise has happened. Earlier USD CHF and USD CAD were almost trading in tandem. On Friday, we have seen a condition wherein USD CHF was around 1.03 and USD CAD was around 1.0250 area, and gradually you find USD CAD has gained significantly when compared to that of USD CHF. This is mainly to handle CAD CHF cross. So CAD CHF cross, they had dropped initially and subsequently they made the rise. And the low in the case of USD CAD is 1.0546 and currently the market is trading near that of the low. The high is 1.0594 and the net change is 31 pips negative. So when CHF has corrected 29 pips, USD CAD has corrected 31 pips. So you can understand that they will make one more downward move, probably to the psychological level of 1.05 or make a downward stop and below that of 1.05 and subsequently make the rise and go above 1.06 area. Then in the case of Australian dollar, you find there is a significant rise of 62 pips. On Friday, they made the rise in the case of Australian dollar to that level of 0.9073 and subsequently made a quick drop and they cut the psychological level of 0.90 and today they have shown the low of 0.8999 and subsequently made the rise. So So net change is 61 pips positive. So when CAD and USD AUD are seen, they are making USD weakening move. And Euro and GBP also making USD weakening move. And USD CHF and USD CAD are also making USD weakening move, but except USD Yen, which is making USD strengthening move. So this is how they make the contrarian move to start with, and subsequently we will find their move on either side, alternatively making USD gaining and USD weakening moves. So let me go to that of the PowerPoint presentation. So let us see what is the expected type of move for this particular day. So during Japanese session, swing and slide moves are expected. So Euro and GBP are expected to go near that of the high to start with, and subsequently make the slide during the late Japanese session. And during the early European session, they are expected to make a lower level swing with a downward stop and subsequently make the firm up move from that of the mid-European session. Then during the US session, higher level swings are expected to start with and subsequently slide. So in this particular week, the last week of the month, we'll come across week beginning contrarian volatile moves, and so the trend reversal is going to start here. So that is a monthly trend reversal. So we have seen overall the yearly trend reversals. During that time, the Euro and GBP opened high and made that drop and made the rise again for that drop. And now you come across the lower level consolidation. And with this lower level consolidation, they will try to make downward stop and or extended downward stop and by making alternatively a contrarian volatile move, that is rising Euro and dropping GBP, or dropping Euro and holding GBP. That sort of moves they will be making. And also they will make downward stop and in the case of yen crosses, and also in the case of the commodity pairs, and subsequently they will make the USD weakening move. And during this process, you will come across USD Yen is also expected to make a brief downward stop and gain the levels. And also the denominator currencies, USD CHF and USD CAD, are also expected to make the gains. And you will come across gradually during the coming days that USD CHF and USD CAD rising, and also USD AUD is rising. That sort of contrarian moves will be seen during the Japanese sessions. And so week beginning contrarian volatile moves are expected. So in this contrarian move, sometimes you will come across Euro making about 50 to 60 pips net change positive, GBP is making about 50 to 60 pips net change negative, or alternatively vice versa moves could be seen. That sort of contrarian moves will be seen in the last week of this particular month. And as I explained in the last week webinar, that the trend reversal of the extended downward stop could be seen either today or on Wednesday during the Japanese session, and then subsequently a massive rise is expected. So normally this sort of extended stop-ins, they do either during the thin volume conditions, so that they will not just sell it to that of the lower level buyers, and they will try to only hit the stops which are present of the buyers at the lowest level. They will try to hit all the stops, and sometimes some people doing the position trade keep about 100 to 150 pips below the stop, the current level, taking a buy, and see that it will be very safe, and the players know about it, and they try to hit all the stops and then subsequently make the rise. So you have to keep it in mind, at the lowest level, the players will discourage the traders to take buy positions. At the highest level, they will discourage the traders to take sell positions. So that way, if you try to take a buy position and they hit your stop, and understand that it is not the bearish condition, they are trying to hit the stops and buy. So when we are selling, when the stop is hit, we are selling at the lowest level. But you have to ask the question, who is buying when my stop is being hit? Then you will be able to understand that they drop the market and buy from the top, the distressed traders, those who have got limited equity. And in that process, many traders try to avoid keeping the stop so that they will be safe. But at times they bring in the margin call if the traders have taken overload of positions, or if they are doing over trading, say taking about 40 to 50% of their equity, the positions, then invariably when they make about 50 to 100 pips move against them, the usable margin will erode very drastically, and that can lead to that of the margin call. So if you don't trade, if you trade without a stop, they can still make you panic by inducing the margin call, or if you try to use the stop, they can try to hit the stops. So what is the best alternative? You have to use the hedging to limit the risk. And once the hedging is filled, you can see how exactly the hedging is behaving, whether it is making loss or profit. And if the hedging is making profit, you can keep stop at entry. And then when they take the move in your favor, you can start or continue holding the positions after stopping out the hedging at entry. In case of the hedging is filled and subsequently make loss for about 10 to 30 minutes, you can understand that during the downward stop when your hedging is filled, then you can cut it with a nominal loss of 1 to 5 pips and then try to keep another hedging order to limit the risk. That is the only way you will be able to safeguard yourself during the trend reversal time. Now, with regard to the initial highs and the low, Euro has got an initial low 1.4112, 1.4173 is the initial high, and market is intact without breaching either of them. And in the case of GBP, 1.06093 is the low, 1.6135 is the high, and you can understand that market has not breached till such time now during the Asian session, so that shows very clearly the volume is very moderate or less. In the case of USD CHF, 1.0395 was the initial low, and they made a 10 pips lower than that. The low of 1.0386, 9 pips lower than that, has been shown. 1.0386 has become the new low. Probably they may come to about 82 or so, and then subsequently make their rise. And the high is 1.0425. So you can understand that once currently CHF is trading around 1.038992. So initial low is 1.0395. So they made a drop for 9 pips. And if they come above that of 1.0395 in the bid side, in less than 30 minutes, understand that was the stop and subsequently they wanted to rise. So this is how we can differentiate it following their moves in relation to that of the timings rather than trying to wait for the candle formation. Then USD Yen 89.74 was the initial low and 90.34 is the initial high, and market is in the middle level 90.05. So they wanted to make one up, one down, and then one up move during the day. So during the European session, they could make some wider volatile moves, cutting the low and cutting the high. That sort of moves could be seen in the case of USD Yen. Thereby, they will bring a downward stop, and in the case of GBP Yen and Euro Yen, and subsequently rise and hit the high and go above. Then in the case of Australian dollar, 0.8999 is the low, which intact. 0.9073 is the high, which is also intact. Currently, the market is trading around 0.905760. So that shows that they're not willing to cut the high or the low. So they are actually handling the denominator currencies to start with now and holding the numerator currencies in a range-bound way. So they are handling the respective crosses of the denominator currency for the week beginning. In the case of USD CAD, 1.0556 was the low, and then subsequently they made a new low, 1.0546. So 10 pips, a downward stop and has been made below that of the initial low. The high is 1.0594, which is intact. So as I explained in the case of USD CHF and USD CAD, they are making a downward stop and then make the rise. During that time, they will make a downward stop in the case of USD-yen and subsequently make the rise as well. So it is nothing to do with the USD gaining or the USD weakening. So it is all question of only making a downward and the upward stop in the respective currency pairs. So let me minimize the PowerPoint presentation and take up the questions which are asked here. Meanwhile, I'll fix the camera over that of the live market code page for you to track the market live. And I'll answer to that of the questions which are asked here. So FX Panther has got a question. Where do you expect Euro GBP to head? In Euro GBP, European session and then for the US session today. Also, what is your expectations with regard to Euro GBP for the week? Okay, Euro GBP cross, as you see that Euro is showing a net change positive and GBP is showing a net change negative. That means they want to make a rise. The immediate psychological level is 0.88. And once they cross the psychological level, you will find there could be stops above that. And if there are only technical buys which are above that of 0.88, then they will simply hit the buys and drop. If there are stops up to 0.8815, they will try to hit the stops and then subsequently make the drop. And once you see that, in the case of Euro GBP, now currently in the net change is 16 pips positive. So once you find that the net change is gradually going up, now 17 pips positive, gradually going up, you just calmly wait for the market to set the high and see how exactly they are handling the high 0.8794. And once they form a psychological level above the high, and if they stop cutting the high during any mid session for more than 30 minutes, then if you try to take a sell positions, you will be able to see the profit. So until such time the short sellers come for the short covering, they are not going to drop it just like that. So there is no hard and fast rule that they have to make quick up and down moves, and they have to see that the short sellers come for the buying at the higher level, and during the drop, the long holders come for the liquidation. Based on that, they set the levels and make the moves in the market, and they cannot concentrate on Euro GBP and other crosses all the time. They concentrate on the crosses during the mid sessions. During the start of the session and the end of the session, they will be focusing more on that of the majors, and during the mid sessions, they will handle the European crosses as well as the yen crosses. Paula has got a question. By swing and slide, do you mean swing up and slide down? Yeah, swing is always referred to as a up and down move. So up and down move of about 20 to 30 pips. Sometimes it might be even 15 pips if the volume is less. So let us take that optimally about 25 pips up and down move is swing. Then they will be making a consolidation. Say for example in the case of Euro, they are making a swing near that of the high. You can see that they are coming to that level of 1.4157, then going to that level of 1.4172. That is how they are oscillating it. That is referred as swing. And after that, what they are going to do? Are they going to cut the high and go above? Or are they going to drop? So the slide refers to the drop. So after making this consolidation near that of the high, they are expected to make a slide. During this process, they may make a brief upward stop above that of the high if there are stops above that, close by stops above that of the high set for the day. Then Rob has got a question. Expected quick rise in Euro and GBP did not happen. Is that expected for month end? Yeah, they made the rise and subsequently the traders turned long on Friday and they made one massive drop and they just hit all their stops. And again they made the rise now for the traders to see whether they can take a buy or they can take a sell. So they are holding it and based on traders' commitment, whether they are taking a higher level buy or a higher level sell, they will make the move. So if the traders are taking predominantly higher level sell, then they will make one upward stop and then subsequently drop. But the forecast is expecting a drop in the case of Euro and GBP, and there could be an extended stop either today during the US session or on Wednesday during the Japanese session, and then subsequently the market is expected to go up significantly, and probably by weekend you should see market could go above that of last week's high, hopefully. Then Samira has got a question. Probably a down stop is going to happen in Euro and GBP before more rise. Do you expect Euro and GBP to cut 1.60, 1.40 to hit the stops? See, it all depends. If they are dropping it, they have to find whether it is worthwhile making a downward stop under that nature. If there are only 3 stops, when they are expecting about 1,000 lots of stops, if there are only 3 lots of stops at below 1.40, they will not take the effort of doing it, because at that time, lot of people will try to buy it from them and they may not be able to sell it to them immediately. So they have to see the predominant of the stop should be below 1.40 or around 1.40. Only then they will try to hit the stops. So the levels are achieved in the market depending upon the stop triggers, and not that the players wanted to. They have a predetermined levels up to which they have to take the market or not. See, the pivot point calculation is based on that. Up to what level there could be a possibility of a stop. But unfortunately, what happens, that pivot point goes with regard to that of the averaging. So the absolute level may differ from that of the exact pivot point. There will be a deviation from that of the pivot point, which people are not considering. Actually, if you take into consideration the deviations, the expected deviations from that of the pivot point, by estimating the standard error, we will be able to fine tune the exact levels. Then, how about gold? Is gold time to buy at the current level? No. Gold has come to that level of below that of 1,100, and they are expected to consolidate here and probably show a psychological level of 1,100 to briefly go above that to hit the stops, and slowly you will come across it will drop to that level of 1,050 and then slowly swing there either way upward and downward about $15 to $25, and then subsequently make another dollar to 1,025 and then swing, then come to 1,000. Then it will start making deep extended downward stopwinds. So you find that the players have offloaded the gold and they are just inducing the traders to buy at current levels, and gradually they will make further drop. So sell and buy trades are wiser, I think. But sell not at any level. Whenever there is an upward stop, and try to take sell positions. When the market is staying in the middle level, don't try to enter into the market, because the volatility is very high in the case of gold, and because the tip ratio is very high, and you need to have adequate usable margin. It is not like the currencies wherein the fourth decimal levels oscillate, whereas in gold you find every pip drop you might be gaining or losing about $200 to $500. So you have to keep it in mind, and whether you will be able to withstand such a volatility of about $25 on a daily basis. So what you come across in gold is very similar to that of Euro GBP. Euro GBP in 2003, 2004, hardly it will make about $50 up and down move. So maximum spread between the high and the low will be about $50, and there are many days you will come up, 50 pips. There are many days there are moves of about 25 to 30 pips. That is why people thought that is the safest cross to trade, so that with the lesser margin you will be able to trade. And subsequently you found that Euro GBP started making a swing for about 100 to 150 pips because the players accumulated the positions and induced the traders to short at any level and then absorbed and subsequently taken to a extreme high, and now they are offloading the positions gradually, and it takes a longer time for them to offload. So this sort of accumulation and distribution is not working very well when there is a sudden drop in the volume. So players will try to adapt a new trading strategy. So in the gold also, the extreme moves have been seen and they are trying to distribute now. Afterwards, they will make nominal swings. So understand that they can only make extreme moves only once in the year, not on a daily basis. If they do it on a daily basis, then those who have taken a higher level buy will be able to exit without much of a loss. So the person who has taken a higher level buy, if he waits for a more time, then loss will multiply. That is how they will make it. So earlier they had done it in the case of crude, and also they had done it in the case of euro and GBP. They had taken euro to 1.60 and GBP to 2.11, and they are all extreme moves. And also currently in the case of stock market, they had taken it, and Friday you would have noticed that how exactly they had dropped, which I was explaining in my yearly forecast. Okay. How profitable is that GBP USD can hit 1.59 level? Probable. Okay. How probable? Levels today or tomorrow before predicted rise. See, it can come to 1.60 and deep drop and extended stop, and we have to see it. Are they going to do it in the case of euro, or they are going to do it in the case of GBP? We have to see. And as they are making the moves in the GBP, it doesn't appear that they will make one extended downward stop, and in the case of GBP, probably they may do it in the case of euro. Or probably they will do it in USD yen. How probable? Okay, Angie's question I answered. Then 50s. You mentioned a forthcoming expected massive rise of euro and GBP as part of the trend reversal time expected sometime this week. What levels do you expect in both? I explained already that last week high could be seen. What levels do you see GBP reaching by weekend? I explained that last week high. Predicted move for AUD. So AUD is expected to make less rise and more drops moves till such time it reaches around 0.88, and subsequently it will make massive rise, participate along with that of euro and GBP. You would have noticed in the case of USD CAD how exactly the drop they have been making is slow, sluggish, and the gain they have made it very quickly because they induced the bearish feel in the case of USD CAD. Many people have taken sell and buy trade and subsequently caught vulnerably there. So that is how they induce the traders to follow the technicals and just without understanding or realizing they try to do the sell and buy trades at the lowest level, and they will just show a nominal loss or a nominal profit and things like that. They will think that it is a wise way of doing trading is sell and buy, and subsequently they will trap them in one go. It's like a gamble. Okay, Roger's got a question. For the next change, is the positive and negative net change positive and negative added to give the monthly net change, or only one is used to give the monthly net change? The last Friday close is taken into consideration for the next month net change, permissible net change. Okay, Chris has got a question regarding USD yen. Is above the pivot level, will it not bounce and rise, or will it drop to 89.74 and then rise? You just watch. So now you can the pivot point, and you can test whether it is going to breach the pivot point and cut the low and then rise. Then you can understand how the players make the market appear as if it is obeying the technicals, and gradually they just disregard it. Will gold still drop to around 1000 level before rising again? I explained, Eric, gold, it has got a great potential to come to about 970 during an extended downward stop, and then subsequently it will trade around that of 1050 to 950 level. And the later half of 2010 will come across gold trading very significantly below 950. The large rise in euro and GBP will be midweek. Yeah, from midweek it is expected. I have a buy position in cable at 61.45. Do you suggest to close the position on a small loss? Okay. This is not the place to give suggestions for the trades. Probably whenever there is a small rise, try to just book profit and re-enter during the drop. Will USD yen rise with euro and GBP this week? Yes. A continuation of the contrarian move. Do you expect GBP and euro to drop big on Wednesday? There could be an extended stop, and the extended stop in the case of euro could be more when compared to that of GBP. That is what it appears, but as the days proceed, then I will try to confirm what sort of moves could be seen as an extended downward stop either today during the US session or on Wednesday Japanese session. The trend reversal points will be established at that time. Can euro and GBP drop about 75 to 100 pips before rise? That is a daily offer. See, it has got a net potency of 150 pips. So dropping about 100 pips or rising about 100 pips is a daily offer. So you envisage that depending upon the type of forecast I have given it and depending upon the market moves, you can now see that they are making a higher level consolidation without a rise. That means they are simply holding euro. For what? For inducing the traders to develop a bullish feel and buy and subsequently make the drop. So this you should be able to read it. Having attended my webinars for so many days in a year. Do you keep track on high-low of last week and run a parallel study with a new high-low of this week to see the bigger moves? You can compare the high-lows of this week with that of the last week high-low, then you will be able to develop a better insight. And similarly, the week before last, the high-lows, you will be able to really get a better picture of the entire month move. That's what you find in a figurative form in the charts. But unfortunately, the absolute values are not taken in the chart. And the last, we are taking 10 minutes candle, 5 minutes candle or 15 minutes candle. On that 15 minutes duration, what is the high set? That has been taken into consideration in the form of a line, and the volume based high and the low are being indicated in the candle. That is why the absolute levels you try to miss it in the candle. And the absolute levels are very important for our understanding. Are they going to make a downward stop and in yen crosses when dropping USD yen and then rise at the same time? Yes. Okay, balance. I have not looked at the chart over a week and I feel I do not see the bigger picture. Therefore, what do you do to see the overall moves of the month, sessions, etc.? See, understanding the overall moves, there are different ways. And you have to start any trade as an intraday trade. The going is good, then you keep stop at entry. Then automatically, based on the stop, you will be able to understand what could be the possible move in this particular day or the week or the month, etc. So simply getting a projections of the expected monthly moves in the chart, the channel formations, etc., the market need not obey. And probably you may not be able to hold the positions during such adverse moves in the market. Ultimately, your position should be able to make profit and you should not make loss, and you should be able to use the appropriate strategy to limit the loss. So that should be the approach rather than trying to develop a mental picture and develop a mental block when the market moves against your expectations. When euro and GBP start rising later this week, what will be USD CHF? It will rise. Will yen crosses make massive rise along with that? Yeah, obviously when euro and GBP rises and USD yen also rise alternatively, yen crosses are expected to rise. Then, do you see a good downward fall in AUD? Yes. Yeah, there is a great potential for AUD to make a drop. Whenever you find euro and GBP drop, AUD could participate in a better way or making a bigger drop. Or take it lower high. Seems like it is forming a downtrend. Okay. You track it, then you will be able to understand how they are handling AUD. How low can that Euro USD go this week? Below that of the psychological level 1.41, probably the earlier low 1.4034 or 24 nearby they can visit. My estimate is they can come to about 1.4170 or so. We think that Colt or the Saints will win in the Super Bowl. Pardon me. Okay, Raj, this month net change is 351 256 so far. What is the net change? I think I don't understand the questions. Yeah. If GBPN is below 144, you go short? No, I don't go lower level short, sir. Will AUD lead the rise? No, AUD could make a drop and then subsequently it will lead the rise. Before that, there are other currencies to lead also. What is the best time frame we should consider to have a better picture on the market? So first day of the week, you just leave it and make a note of the price action. From second day, if you start watching the market, you will get a better understanding. Why do yen go up? BOG could come out to sell. Why do you think immediately only the BOG has to act in the market? Only then the market can make up and down move. These are all preconceived ideas. Okay, Euro GBP, is it still going to try to break its psychological level? Yeah, you have to watch. Every 5 minutes if you ask question, I will not be able to answer to that. And that shows that you are very impulsive and the market is known to punish the impulsive traders, and calmly watch for about 30 minutes to 1 hour or in 1 or 2 sessions. Then you will be able to get the real insight of any currency pair. Rather than every 5 minutes checking with me, that means you are not developing any mental picture of that. You have to develop the mental picture and you have to develop the insight to make effective trading, rather than asking somebody, and if the market goes 1 or 2 pips or 5 pips against the expectation, immediately asking one more question does not help. You only trigger your fear. That is very, very bad for trading. All emotional decisions are wrong decisions. It has been proved time immemorial, right from Hitler days. So please control your emotions. Then you will be able to do wise trades. Okay. So let me just focus the camera over that of the PowerPoint presentation again. Display the forecast for today. Japanese session swing and slide, and the European session lower level swing and probably a brief downward stop and firm up. Then higher level swing with an upward stop and brief upward stopping and swing and slide are the expected moves. So invariably you will come across contrary move, Euro rising, GBP dropping, or GBP rising, Euro dropping. That sort of moves could be seen in this particular week, and it is a trend reversal time last week of the month. So be careful, and they can suddenly increase the volatility, and try to trade with a hedging order to limit the risk. So let me take this opportunity to thank everybody who have come here to listen to my talk, and I'll come back again tomorrow. Meanwhile, I'll display the forecast in the blog and try to answer your questions using the blog. Thank you, one and all.